Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we got a little bit of a push there towards knocking out the 100xers coming into the weekly candle close. Are we going to see a further push to the upside or drop after that hit to the 100xers? Let's go look at the liquidity as we see on this pitch fan rejection off of the 0.5 level and coming beneath the point of control of this local consolidation range over the last 2 weeks. Are we going to come to this further test of support down here at the 618 golden pocket at 28k? Let's go take a look at the liquidity of high block. What does that mean? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker. We get to see where those characters lie in wait or have gotten burnt to a crisp already. So let's go do that now. So yesterday we were saying overall we expect it to come down into the 28K region. We did keep the group updated in terms of saying that BTC could make a push here as it started to reclaim the hourly cloud and had the hourly cross up event in mind. So it did give a little bit of a bounce towards those 100xers, and we did come and take these guys out here. 36 million, 35 million, 16 million, 32 million, and 30 million all gone.
Fatality.
And that's what happens when you don't pay yourself in profit. So those guys were actually in drawdown almost the entire time. They were given opportunities to break even at certain points, but if they held, they were liquidated and those shorts were taken out. Now it's coming back to some of the 100xers on the other side of the spectrum, which were pinged in down here. They took 17 million, and there's 22 million, 31 million, and 41 million, and 22 million down below. So are they going to continue further down to get these 100xers, or are they coming up to the pools at 29,382 with the 182 million there, and the partner in crime up here over at 29,548, which we have marked off in the charts. Let's go ahead and take a look at the 7-day, see what has changed there. Shout out to everyone that may step in the future. 7-day time frame. 7-day time frame looking a little bit hotter down below than up above. You got 3 billion down at 28.6 and a bunch of 3 billion, so basically 15 billion down to the 28.6 region, as opposed to up above you do have 3 billion, but slightly higher down below on the 7-day time frame as it stands here. If you look up above even further though, there is some hotter liquidity up in the 30,100 region to go up into that region, but in the immediate region 28.6 seems to be the hotter target. Okay, let's go to the monthly time frame, also starting to get hotter up above. You got 14 billion up at 32k, 13 billion up at 30,002, and 11 billion 30,003. So you start to get the juiciness of the liquidity up at the 30,000 range, 30,002 to be exact, and just up above we have 6 billion at 29.5. We previously took out the 3 billion at 29.2, and now we're contemplating going to grab the stuff down below. Down below you have 13 billion at 28.2 and 12 billion at 28.1, 8 billion, 8.7 billion 28.3, and 8.7 28.4. So you have nearing 40 billion in this entire range down to 28.1. If you include the 28.6 and 28.7 ranges, you definitely go over $40 billion, as opposed to coming all the way up to 30,002 for that 14 billion. It would make more sense to come down to this region first, coming from 29.1 down to 28.1. So $1,000 in price action in either direction will have you with some 14 billion. You have slightly higher up here at 30,002 than you do down at 28.2, slightly higher up at the 38, that region. Let's go ahead and take a look at the 3-month. What's up? Got to go in early again today. This week is one of the few I'm teaching a STEM program. We'll be teaching about the food chain and dissecting owl pellets. Exciting to see what the owl ate for breakfast, and then basically do a series on life since it's that season. If we look at the 3-month time frame, you do see that down below here you have $22 billion at 28.4, 34 billion 28.2, and 26 billion 28 even. Just above you have 22 billion 30,002, 16 billion 30,004, 15 billion 30,006, 20 billion 30,008. So 21 billion as opposed to the 22. You're cutting it close to the wire here, but just overall looking at this as it stands here, you have slightly more in the 28.4 region, 22 billion at 28.4, as opposed to 29.8. You have 4 billion and 8 billion and 6 billion. You have just more interest generated in the 28.4 region, which is closer than up above. So on the monthly time frame, you do have this little bit insinuating it goes lower. Looking at the 6-month time frame, you're starting to see everything getting hotter up above at 32,100, 137 billion up there, and 77 billion at 32.4, 112 billion 32.7, 106 billion 33 even, 122 billion 33.3, and nearing 100 billion at 33.6. So the pools are percolating up above, as you see, but also down below you see this 142 billion at 24.6, 180 billion at 24.4 or 24.3. Are these protected positions? Why would they leave them unscathed as of yet? They have yet to come back down to them, but they are building in heat. So coming down to this 28.2 region, you have 48 billion down there. You have 37 billion up at 30,003. As it stands right now, 28.2 is the harder target, and the overall narrative of the heat is generated down below. You do have this up above to come snap back to at a moment's notice. Let's go to the 2-year time frame. So they previously left, for example, back in February at 25,600, they left 162 billion on the table. And then they shifted down here, and then I said they would be coming back to this at some point, and sure enough, boom, they snatched up that $178 billion. So the same thing could be the case for this little bit of happiness of $241 billion at 24.4. They could just as easily come down to this at some stage and take out the liquidity pools there. And likewise, they have this pool building up above. You have 181 billion at 32.4, 181 billion 32.8, 197 billion 33.2. What's up, kiddo? You want to say what's up? Come here. No? You want to come here? No? You don't want to come up here? No? All right. Well, so on the 2-year time frame, you're building this narrative of this potential pool of shorts to get hit, and down below you have this narrative of potential longs getting hit. You have a thicker region of that of 241 billion at 24.4 to be hit. So that could be something we see in the future. Do we come into this pool at 28K for the 47 billion at 28K even? I'd expect them to retrace into this at some point though. The interesting thing that's different from this point in the past here is that this was less thick than up here, so it was more obvious that they would come back to this first, then continue lower at that time. Here you're starting to get in a rock in a hard place. You have liquidity, a large amount, 600 billion up above, and then you have also 600 billion down below. 600 billion plus, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You got 1,100, like you got nearly $1 trillion down below, and you got 600 up above. So are these positions protected? Are these market maker positions? Like, what's going on? Why do you have that large amount that they're not coming back into? Is there something we're not privy to in terms of ETF approval and stuff, and they're coming back into this zone? It's definitely novel for me. I got into this whole high block thing back in January, so seeing where these pools develop in this manner, like you can go back 2 years here and you don't see it in the same thickness as it is right now on both. So this is a higher generated heat map than we've seen in 2 years. The last time we had a generated thing like that was back in November, and then we came straight down and ate that liquidity. So are we building a narrative to, we didn't have as much up there, but we did still have 100 billion that they left to get paid on that short. So here they're letting this percolate. Last time we checked this, we did something with how this changed from, let's go back to July 14th, 175 billion, changing to 181 billion. So they pinged in 9 billion more since July 14th. If we go down here, they had 237 billion in longs, and then over here 241. So they pinged in 5 billion. So that's not necessarily that big of a difference. Coming back to here, 192 to 241, that's 50 billion. 159 to 181, that's 30 billion. So you pinged in more longs since the end of June to now. So this has been getting hotter than the shorts have. So there's more long interest being generated since the end of July, or end of June rather, than in shorts, just looking at this 2-year time frame. Trickiness, the trickiness of liquidity. And looking at here where we want to go right now is there's this little range down here at 28.2 and 28.1 that I'm interested in for multiple reasons. Coming down into this point of control golden pocket region down here would make sense with the liquidity and the point of control of the previous 60-day consolidation here. And yeah, let's go into the Binance chart and see what else I see in that. So the 28,100 also happens to be the Hail Mary of this impulse retrace math to the downside on the Fibonacci. And if we throw on our indicators, link in the description for more. Scroll down to features, toggle everything at your leisure. And also you can read about each as we go over in prominence. Each component rather. So what we were seeing earlier when we gave out that post after our update on the hourly was the hourly cloud had come down to the price action and it was starting to thin. We were talking about it reclaiming the cloud. It did get a little push up and came down to that fair value gap we were talking about and pushed up further. So this was reclaimed. And this is an idea of how the cloud holds while you have the cross up event, and you had a cross down thereafter. But where are we seeing it go from now? Let's start to assess. I only have a little bit of time before I got to be out of here, so let's make it quick. On the daily time frame, you had some bearish divergence play out on the money flow, hidden bearish, it dropped to the downside. Now you're seeing this potential takeoff of the rising sun of the Williams, however getting suppressed by the daily suppression of the 50 level and not seeing this takeoff due to the 3-day cross down event that we've been pointing out since essentially Friday, July 21st. And this potential baseline cross down event could have you tanking like it did back here for 60 days. So the 3-day time frame closes in a day's time, end of Tuesday, basically Tuesday's time. You have the weekly candle closing in about 45 minutes. I will not be present for that, but let's go take a look at what that stands to have do. Starting to get the KD lines crossing down. I doubt this will change, so you're going to bring this down a little bit in probability to below the 50 level, most likely at 41 or something like that. And then this will cross down with another alarm. You're getting previous RSI divergence, which has had us retrace for 1, 2, 3, 4, 5 weeks now. Are we going to continue further is the question. On the weekly time frame, we lost the weighted moving average, we lost the adaptive moving average, and these are now potentially resistance on our way back up. Coming to the 22-hour closes entirely in 45 minutes with the daily candle close. 2 hours already did close and did reset some of this in potential. Not really seeing a clear entry as of yet. Let's go to the 12-hour time frame, getting that suppression off of the 8-hour cloud. This 8-hour cloud that we had here, starting to shift in a manner here, but getting rejection off of the cloud. Going back to the 12-hour. The 12-hour money flow is coming up from beneath here in a manner here, suggesting that at some point you could get this, although with this 43 minutes close to the 12-hour, this could bring this back even keel on the RSI money flow disparity here. You're seeing the volume taper in a manner here as we drop, so we could get some sort of play out. This is false move Monday, so they're going to ping the highs and the lows to get the impression for the week, and then basically shift from Tuesday and Wednesday. Tuesday and Wednesday have not been complementing one another, which has been interesting to see. They've been kind of negating what the other does. So Tuesday dropped it and Wednesday rose it, and then Thursday dropped it back down again. This is your standard kind of, it looks like a diamond formation almost. In diamond bottom, you got this kind of, it's going lower though. Generally you get tighter into that diamond formation, but you could technically say that this is kind of, you know, a diamond formation, possibly forming with that stab and rise idea if it holds that region. Coming to the 12-hour cloud though, the 12-hour cloud does suggest that it's not tapering just yet. It is coming down in a thick manner here, has yet to taper completely. You're getting an indecision doji in this last 42 minutes before the close, and this angle is not curving in the same manner the 8-hour is. Going back to the 8-hour, seeing this curvature, and this could be tapering back down some more, so you could be getting one of those little fake out style things where it comes back down again and curves back down in an angle here. So let's watch out for that. You have this situation where it occurred here and it faked out and went back higher. So the cloud on the 6-hour, if we look at the 6-hour cloud, starting to angle down as well. You had previous hidden bullish or regular bullish divergence on the money flow from back here. Not so strong because it went through this pivot here for whatever reason. Looking at, it didn't follow the price action rule of this pivot here on price action. It just looked at the money flow pivot only. So that's not necessarily genuine, but it did see a surge up here, and you're getting the money flow above the RSI and the KD lines about to cross and potentially come down on the 6-hour here. 6-hour not overbought, but looking to double bottom perhaps on the 6-hour time frame. 4-hour time frame got previous bullish divergence on the money flow, and then that was where I put that idea of possibly bouncing out as the idea here, and we're getting a cross up, cross down, fake out here with the baselines crossing up and crossing down and crossing up again. Getting some volume stepping in here on the 4-hour time frame on this last green candle, but not repricing enough, just stop hunt and drop. So So as of this clue telling you it is possibly going lower, but you still have the expression of this coming up more. Money flow beneath the RSI coming up would be something that could occur on the 4-hour time frame. You're holding this super trend level. If we look at the hourly time frame has been getting oversold, and that's where yesterday we were talking about it possibly pushing up. We have yet to see it drop beneath this one level of the bearish trend based fib, and you're getting overbought on the hourly time frame once again. Sideways consolidation, man. It's if you're scalping, you could just be scalping it until you get these alert to alert and taking these percents. Just not, I don't have the ability to monitor it, so I'm looking for more of a swing play for myself personally. If we go into the daily candle close, so we already ascertained, just wrapping it up for a nutshell, in the last 9 minutes here before I have to go. We have this liquidity inbound 50x pool at 29,382. We have their partner in crime at 29,548. We have a lot of stacked liquidity starting to get lost to father time down here at 28,575 and 28,490, and those will get lost. That 138 million will get lost at 28,490, but they will move into the 7-day time frame. And this is why you juxtapose the 1 minute to the higher time frame, because the internal pools start to disappear into the external, and you could be seeing now that there is this imbalance to shorts as of this minute, which a moment ago was not that deep, as you can see. So if you're just looking at this right here, it's calling for a surge up to 30K, but if we looked at the higher time frame, which we are looking at, you do see these pools down below at 28.1 and the regions leading to that. So as it stands on the hourly time frame, if we just factor everything and keep it copacetic with what we're seeing on the hourly, as the hourly holds this cloud here, this could be the narrative building to just go up to stab at these pools at the 29,546 region, just looking at it holding this cloud here and flipping it. So this means that the volume could be entering for a surge to the upside in that repricing model. You have some vector candle 1, vector candle 2. You had the first test here and pinging the liquidity, and now you're starting to make this kind of shift up on the hourly time frame. Disregarding all of this overbought nature of that, you could be getting this possibly rise out here to take out some of the short liquidity coming up into this region. So if it holds this cloud on the hourly time frame, just looking at the hourly play here, if you just bounce out of here and then possibly come up to here, you could be building a narrative structure to 30K, but it would have to bring something with a repricing model in mind that is actually has conviction behind it. There's no conviction here just yet. And the 4-hour cloud, interestingly enough, it's going wild here. It's been a while since I've seen such wild nature of this cloud. I don't remember actually seeing it be this wild in such a short period of time. This is more of what I'm used to, where it shifts and undulates and gives you these confirmation taps and everything like that over a long period of time. So this is interesting that this is happening in such a short period of time of 2 weeks. You have these shift. So hard to read for sure in the last 2 weeks with this 4-hour cloud anyway. So far getting a rejection off the adaptive. I'm going to remove that really quick. I'm not sold on that. But the narrative structure starts to build on the lower time frame and make its way higher. So if you were so inclined to believe, I'm not buying it until they have a large liquidity grab. The sellers are in control as of each time it hits, it gets sold off. Boom, boom, boom. So every time they hit these highs, they get sharp sell-offs. So I'm not sold on the long just yet. It looks like they're positioning possibly lower. I'd like to see it come into these regions. $12-hour time frame cloud, the 6-hour and 8-hour clouds, these things started to shift, but they're going flat and not curving. It looks like it could curve back down. So I'm not sold on the 6-hour cloud. Could just as easily curve back down like it did here. So as it stands right now on the monthly time frame, you do have this $40 billion down at 28.1, as opposed to it's starting to be 40 billion from 30,001 and above. So the distance to traverse to get the liquidity would be less to go down to this region than up to that region. So I'm slightly biased to the downside right now. I have to honor what's happening here on the cloud though, on the hourly. If this does give you some volume here, coming up into these regions to see these 29,382 levels could be inbound based off this. This is Monday though, false moves galore. So it's up. I don't really have it pinged in a pocket right here. You're starting to come down on the hourly. It looks like the money flow is beneath the RSI, ambiguously suggesting you double top here. The last time we had that, we did see a slight rise from this level up here by the percentile of 0.5%. So when this disparity of the money flow and the RSI gets apart like this, you could see this rise up some more. So the hourly time frame suggesting you could get this rise. You have a shoulder, head, and possible shoulder if you're trying to get out of this region to stab at the liquidity above. We have this pool lurking up here that we talked about. This guy, this 247 million, sorry, at 29,557, and their partner in crime at 182 at 29,382. 29,382 would put you over here at the top of the range. We'll just put it there. So you have those two pools just waiting to be taken. So if they surge up to this guy here, what's the reaction off of this pool if it comes up to this pool? Do you start to reclaim the 786 and make your way up to this pool? Or do you start to fade back down into this little bit of happiness? Looking at the 4-hour time frame, not so this 4-hour candle is just pathetic in that it's a spinning top doji. the money flow beneath the RSI here suggests that this 4-hour could continue, most likely on the close of the stochastic. This is going to come above 50 here and possibly continue higher on the 4-hour time frame. If we look at the 6-hour in conjunction with this, KD line's about to cross money flow above the RSI. Previous rejection, getting the money flow divergence. Just not seeing anything clear just yet. I'm be honest with you, it's not so clear right now, but the 15-minute and the hourly suggesting on the cloud that they could go higher. So I'm gonna have to run with that and say that it's holding the cloud on the 15-minute, and it's holding, and the cloud is insinuating going higher, as is the hourly. So we're just going to go with that for now and assume that based off the cloud, the volume weighted cloud, and the fact that they reclaimed it and it's thinning here above the cloud, that the hourly time frame could take you to the upside. I'm not sold on it. A lot of other ambiguous stuff in here that is not my cup of tea, but if you're so inclined, it could come up to the likes of, you know, percentile or two. We'll see how it goes, as I have to head into work now to teach a lesson about life, a life lesson. All right, well, ladies and gents, that's my story and I'm sticking to it. I'm just seeing what this hourly cloud can give us on the hourly time frame. So far, reclaiming the cloud. The cloud is thinning with slight upside potential on the books. If you look at the 4-hour, it is also curving up on the cloud here. So even though it's ugly in nature, it could be coming up to test the liquidity above, at least squeezing the 50xers for a little bit of a test of the liquidity. On the 1-minute time frame, we already outlined the pools at 29,382 and at 29,548. Once again, you have some down below at 28,575 and the partner in crime about to get lost to time at 28,490. So that's my story and I'm sticking to it, folks. So have a nice day and thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thanks for doing your part, for coming on in, and we'll catch you on the flip side. Peace.